this should be a really strong conversation because a lot of things that Matt talks about, not only do I agree with, but I think explain a lot of what's happening with the current environment. So my name is Michael Guyette, publisher of the Lead Lag Report. Special guest for the hour is Matt Stoller. We're going to be talking about monopolies, capitalism, the crisis of democracy, and of course, inflation. So a lot of different big topics we'll kind of weave together. Matt, for those who are not familiar with your background, talk about who you are and how'd you get so involved in trying to understand what's happening with monopolies in the US?
Sure. So by background, I'm a Democratic political hack. So I worked in Democratic politics for most of like the 2000s, and then I worked in Congress on the financial crisis. And that kind of led me to understand that there are some deep-seated structural problems with our economy and with politics, and made me less partisan. And from there, I did a bunch of research to try to understand why we responded to the financial crisis in such a toxic way. And I say we, I mean policymakers in the Democratic Party. And I wrote a book called Goliath, the 100-Year War Between Monopoly and Democracy, where I looked into the traditional political posture in America vis-a-vis business and traced that over the 20th century and saw how some dramatic things changed in the 1970s. And since then, I've become an advocate of addressing dominant market power, particularly around big tech, sort of across the economy. And the main body of law that handles that is antitrust law, but there are other areas of law that address market structure questions. And so now I'm at a think tank called the American Economic Liberties Project, where I write about antitrust and market power questions. And I also write a newsletter called Big, which is on the politics of monopoly and finance. So that's who I am. That's my background. And there we go.
Okay, so let's talk about that, the toxic way with which the government handled the great financial crisis, because I'm going to assume that you're really referring to the idea that the government threw a whole bunch of money on it and there really were no sort of punishments, let's call it, for a lot of these big banks that really meant anything. But I want you to talk through, what do you mean by toxic way?
Yeah. So generally speaking, a lot of people look at the financial crisis and see at first when I was looking at it, I thought, oh, this is a problem with mortgages. And then you're like, oh, this is a problem with finance. And you kind of look at it as like a plumbing issue. And then gradually, over the course of several years, and this probably sounds stupid to a lot of your audience, but I realized, oh, this is actually a political crisis. This is a constitutional crisis. And what happened, like constitutional in the sense of how we constitute our country, not in the sense of the formal constitution. But what it was is really our choice as a society to make the property right, to elevate the property rights of a small group of people over the property rights of everybody else, right? So it's not that Wall Street got bailed out that was the issue. It's that Wall Street got bailed out and everybody else got put into foreclosure. And so that creates a dual tier society where you almost explicitly, I would say explicitly, don't have the rule of law for the powerful, but everybody else has to adhere to the rule of law. And so laws for people who are powerful are kind of like guidelines or suggestions. And that's the crisis that we are in, that we've been in since that period. And I mean, there's lots of details as to kind of the technical pieces that we got wrong. And I say we both as a policymaker at that time, but also as a Democrat, because the Democrats were by and large in charge of the response to the crisis. But that's my general overview.
And the rule of law for the powerful, that's an interesting term. I mean, I think everybody intuitively knows and agrees with that, but that's an outgrowth of this trend towards concentration of power by corporations because they have the resources and they can basically fund whoever it's going to run for political office. So let's talk about for a moment, because I know you've done a lot of studies on this. How did the trend towards concentration, how did that really take place? Was there some sort of start or some kind of legislation that passed that made it more likely to occur over the future time periods? Talk through sort of the evolution of that for a bit.
Yeah, sure. So it wasn't one statutory change. There was an ideological revolution in the 1970s that took place from about the mid 1970s until the early 80s, at which point it was kind of set. And there were, additions and modifications to it in the 90s, mostly globalization. But the fights happened from 1975 to the early 1980s. And the basic idea was that before the early 80s, the traditional American approach to commerce, and you go back to the 1600s, the Anglo-American tradition here. But the traditional approach was to say, big is bad. Like, we are worried about concentrations of private power in the marketplace the same way that we would be worried about concentrations of power in politics. We have checks and balances in the political arena, and we want checks and balances in the commercial arena, and checks and balances are competition. And this took a number of different forms. In the 19th century, it was a lot of land reformers. It was a lot of states and cities took the lead because there just weren't big corporations. And then as you saw, development of railroads and telegraphs and things that sort of stretched power across state lines, then you started to see a federal response, and the antitrust laws were part of that. And until the 1970s, it was basically like, if you're a big corporation, the assumption was you're probably doing something that is anti-competitive. And so we're going to be especially skeptical to you when you try to buy someone, like when you try to merge, when you try to, engage in certain practices like tying two products together or certain types of bargaining patterns. And, and that's how it worked. And the view was, look, we're afraid of concentrated power and we want rivalry in markets. Then there was a movement on the left, which sort of was kind of quasi-socialist, and it was the consumer rights movement, or manifested as the consumer rights movement, the sort of Nader-sponsored consumerists. And this was the ideas behind this were some left-wingers like John Kenneth Galbraith, who was an economist, Richard Hofstadter, who was a historian, C. Wright Mills, a kind of counterculture sociologist. And then that was on the left. And on the right, you had the Chicago school thinkers. These were people like Milton Friedman and Robert Bork and George Stigler. And together, these movements didn't like each other, but they both basically said that old model of saying that big is bad, that we have to be afraid of concentrations of power, that was a foolish model. Instead, we should think about, and part of that big is bad thing was we need to support entrepreneurs and small business people, or what was called small capital, as well as people who work for a living. So farmers and workers and business people versus the monopolists and the financiers. In this changed, and the conception of the Galbraithians and the Bork types was, you know what, Americans are not citizens we're not afraid of power, of concentrated power. Americans need to think of themselves as consumers. And it doesn't matter if there's concentrated power, as long as there's cheap stuff, right? So low prices, cheap stuff, that's the goal, efficiency. And so the shift from citizenship to consumer and from fear of concentrated power to efficiency was the philosophical reorientation of how we do policy. And the antitrust statutes never actually changed, but the whole way that we do enforcement changed radically. And there were, I could get into details, but there was effectively an administrative rewriting of the law in the early 1980s. And then there were a bunch of statutes that did change, like a lot of the deregulation of the time, the changes to trucking, of railroads, ocean shipping, airlines, banking, so on and so forth. Those statutes did change, but it was all part of this idea that efficiency, low prices, and consumerism were the way to think about the world, not consolidated economic and political power. And now we're revisiting those. And, part of that in the 90s and 2000s was saying, well, we don't care. It's not just domestic concentrations of power. We don't care about foreign concentrations of power either. So it's totally cool to offshore all manufacturing to China because, yeah, they're a foreign country, but power doesn't really exist. It doesn't matter. As long as stuff is cheap, it's fine, right? So we've built this world where there are these consolidations of economic and political power all over the place. And we have effectively no framework to deal with them because our policymakers largely believe that power doesn't matter. The only thing that matters is efficiency. And the economists who control policymaking think that everything is being run efficiently. So now we're revisiting these assumptions, but that's the basic change that happened.
It kind of goes to something I've said before many times, which is that the real wealth gap is not really between rich and poor; it's between corporation and individual, right? And presumably a lot of those changes in legislation, it's kind of like who's watching the watchers, right? They're probably written by or influenced by lobbyists to tilt even more towards that efficiency, concentration, and that kind of brings us, I think, a little bit to today, because I've argued for several month, maybe even a year at this point, that when you are in an economic system where everything is essentially an oligopoly, you can argue monopoly, but I'd say more oligopoly. Most industries are really controlled by two or three major companies. You don't have competition. That's what keeps prices elevated, and supply chain disruptions become a convenient excuse for having higher margins. Talk through if you think, first of all, that that's a valid way of looking at today's environment, because that does relate directly to inflation. And if there really is any way to reverse that, because it seems like even if you were going to have some kind of renewal of focus around anti-monopolistic type of practices, that would take a long time and would be a pretty heavy lift from here.
Yeah, I think you're basically right that we have an oligopoly problem. I mean, I think corporate concentration is really the way that I talk about it. And I don't really distinguish between monopolies and oligopolies because I don't think it really matters that much. There are some slight differences in how oligopolies work versus monopolies, but the basic problem is the same. So yeah, one of the things that's interesting about this inflationary period versus other inflationary periods is that most of the time when we've had an inflationary period, the inflation, that the extra nominal growth that's happening in terms of money and growth in that period is usually going to labor, right? So people are afraid of the wage price spiral because prices go up, but labor, you have to pay your workers more, and then that forces your input costs up, and then that causes, then they have to keep raising prices, and so it's a spiral, right? That's the way that people think, and that's the way that economists have modeled inflation in general. And what's happening this time is something, and the Economic Policy Institute did a study, and I've done my own sort of back the envelope calculations, but almost all of a vast majority of the inflationary price increases are going to profit this time, and very little is going to labor, which is, some is going to increase commodity prices. But that's just very weird. It's a weird dynamic right now. And probably the reason that you're seeing this kind of inflation wage or inflation profit spiral is because there's much more consolidation across the economy. So a really simple example would be the shipping industry, where because of significant changes in shipping law from the 1980s and 90s that were really focused on efficiency versus power, there's been enormous consolidation of the shipping industry. And so now three alliances control, 80 to 90% of shipping, especially on, the vital east-west route from China to the west coast of the United States. And these shipping lines, because they are maximizing efficiency and not resiliency, have built just massive, ultra large container ships, like the one that got stuck in the Suez Canal, another one that got stuck offshore in Maryland. And these ships can only dock at certain ports. So you have a lot of ports in the U.S., so we used to spread the load of imports and exports across a lot of different ports, mostly medium size and small ports. And now, because of these ultra large container ships, there's just not that many ports that can get these ships in, and the infrastructure has been consolidated in a few places, particularly LA, Long Beach. So then when you have like a whipsaw where you have a drop in demand and then an increase in demand, like because of COVID, you can't spread the increased load across a number of different ports. You just don't have the infrastructure. The infrastructure only exists in a couple of places. And so the net effect of that is that everything gets delayed and prices go way up. So, if you were to calculate what is the cost of shipping delays on what we import, I think you could make a credible argument that these delays, which are a result of this consolidation, have increased placed the de facto tariff of between 15 and 25% on everything coming into the United States. You don't hear that in the press because they're not thinking about private tariffs via these sort of the shipping cartel, but that's actually what's going on. And that causes, I think the IMF came out with a study the other day that said that increased inflation by 1.5%, just the shipping, right? And that's not getting into semiconductors, which is has consolidation problem aspects, or many of the other parts of the economy where, you have consolidation problems. And, fundamentally, when you make a change in your policy framework, like we did in the 70s and 80s, where you say, well, the point of business is not to produce goods and services at a higher, that are cheaper or better quality. They may do that, but that's incidental. The real goal is, and every management consultant will tell you this, is to acquire market power. If that's your goal, if that's what the policy framework does, then the best way to do that is to create a bottleneck in some sort of productive process and squeeze. That's what a toll booth, right? That's Warren Buffett said the best business model is a toll booth. So we have all these toll booths, bottlenecks all over the economy, because that's what our public policy framework created an incentive for. And when you have all those bottlenecks and all of a sudden there's a supply or demand shock or both, then it just gives all of these people throughout the economy the opportunity to just squeeze. And that's what we're seeing. That's what I think a lot of the inflation is related to. That's a lot. That's a lot of question, I guess. So I wrote in 2020, I wrote a piece about how the Minsky moment for private equity is here, right? Because what private equity isn't one thing. And there's a lot of private equity firms that, they lend money or take equity stakes in companies they know something about, and they make operational improvements. And usually these are smaller funds. It's essentially merchant banking. When I talk about private equity, I'm talking about the large mega cap funds, like the Apollo and KKR, et cetera, et cetera. And what they are doing is what Brandeis talked about, which is, they're using other people's money to control corporations, and either they do a number of things. They rely on either multiple expansion, or they reduce labor costs by laying people off, reducing the quality and service of products. Sometimes they make operational improvements, although I'm not convinced that that's that's not a common feature of the large leveraged mega cap funds. They just don't have the operational ability to do that. Like conglomerates are not efficient, and neither is private equity, at least not the big guys. They also often try to monopolize, like they try to roll up an industry to acquire pricing power, or they engage in forms of financial engineering through the use of debt and leverage, which is, I think, the most common, and fee extraction. That's I think, the most common one. So there is a monopoly issue there, which is significant, but more of it is, I think, a financial engineering issue. And the problem with financial engineering is that it usually relies on leverage, and that's fine when the Fed is keeping interest rates really, really, really low. Or when you have access to really cheap capital, which private equity firms do. And this goes back to the financial crisis. Private equity firms have access to cheap capital. If you don't have any power, you don't have access to cheap capital. But what happens when you've created, you've levered up most of your portfolio companies, and you can't sell them on the market anymore because, everyone is in the same situation you're in, and interest rates are going up, and you can't, you just can't service that debt anymore. Well, what happens is there is a collapse in in these private firms whose prices have been really high, and that's been, the multiple expansion has been sustaining these private equity firms. And that's why I thought when all of a sudden what happened in 2020, you had, I guess, 10 years of just placid, cheap capital and private equity investment. And all of a sudden, the demand dried up, and capital was not particularly, well, capital, I guess, was still cheap, but demand dried up. They were going to be in a lot of trouble. And I was like, either they get bailed out, or, this is the crash. And then what happened is they got bailed out. And, they massively, that bailout was massively successful in terms of increasing their profits and valuations. But now we're seeing, it sort of set us up for an even bigger crash, right? And so now I guess we'll see if the Fed continues to raise rates and continues to tighten financial conditions. I think that could be a very serious problem. And private equity is really big at this point. It's like there are $4 to $5 trillion of assets under management. So this is, and there are all sorts of ways that there's hidden leverage in there. So I think that it is quite possible that, the Minsky moment, when it comes, will, manifest through private equity in a much broader way than people assume. It's not as big as the mortgage crisis, because mortgages were like, I don't know, $14-15 trillion, but it's pretty big.
But let's play that out for a moment here, because I think that's an interesting thought experiment. So part of the issue with '08 was obviously moral hazard, right? And nobody, as far as the big banks, really got punished. They got bigger. There was even more consolidation, and everybody else got hosed. So if you were to have this continuation of the Fed hiking rates and tighter liquidity, well, then you have another crisis, another crash. Then you have another potential bailout, and you're at a moment, I would argue, in our economic history where it's like that saying, if everything is too big to fail, if everything is in that kind of situation, then everything has failed. So, do you think that the response, if you were to have a real crisis, a real crash, or something like that, where private equity is taking the first major hit, do you think that it's going to be the same repeat, and meaning that you just repeat that cycle of bailing out these huge firms, and that makes them only more powerful, more concentration, or would there really be no parachute this time around?
I mean, that's a political question, right? That's not there's no way to project that because it's just, the way we effectively don't have public rules for our markets at this point. It's kind of like the powerful do what they want. And so the way a regulatory system really works in those situations is that there's a crash, and then you set the rules by who you bail out. And who you bail out is contingent upon who's in power when the crash happens.
Right. No, exactly right. Okay. So there's a few things I was writing down as I'm listening to you. So I am curious your thoughts on how much of the consolidation of industries would you attribute to law versus sort of the natural winner take all effect of technology, right? Because and it goes back to this efficiency versus resiliency argument, which we'll put out there too. But isn't some concentration, you argue, inevitable no matter what, even if you had all the right laws in place and the right implementation of those laws?
Okay, so there's a couple of ways to answer that question. I will say that if you want to start from 1980, then I would say that all of it is a response to law. I don't think there's anything natural about the increased economies of scale over the last 42 years or whatever. Is entirely policy driven. And the reason I think that is because if you think about, you can't confuse economies of scale with the corporate form, right? So, one in the 1980s, General Motors said we're the biggest car company in the world, and they were like, we have these great economies of scale. But the reality was their car factories were actually pretty small in the industry. So Honda's car factories were making, $500,000 cars a year, right? And GM's factories were making 200,000 cars a year. GM had more factories, so they made more cars. But in terms of the operational economies of scale, Honda was actually, quote unquote, bigger. They were operationally more efficient. And GM was playing this sleight of hand where they would say, oh, the fact that we have this corporate shell that stretches across multiple factories, that is an operational economy of scale. Really, that's just a legal arrangement. And it's the same thing with something like Google, which, a search engine might have it does have economies of scale, but they have 9 products with more than 1 billion users, or maybe 10 at this point. And there's nothing inherently like more scalable about owning, YouTube and a search engine like that. That's just putting two things under the same legal umbrella. So I don't think that, the corporate form inherently has economies of scale underneath it that are legal in nature. And I think the best example of that would be the internet itself, right? Which is the most scaled network system we've ever seen. Since when it was formed in the 70s, it's scaled, 10 million or 100 million times. And nothing like no corporation has scaled anything like that. And the internet is just it's a public system. It's it's public system. So I think we have to be careful about how we think about economies of scale. Obviously, like if you go back to the beginning of human history, then you're gonna there's definitely technology, the ability to apply scientific principles we've discovered in engineering form absolutely allows us to grow much bigger institutions than we could. But in terms of, we discovered that long before we discovered that in the 19th century. So I think like all of these are just policy choices, and we have to reckon with those policy choices because we control them as citizens. Like this is all up to us. There's not some natural law here.
I'm curious your thoughts, Matt, on unions for a moment, right? As a response to the balance of power going to concentrated industries run by just a couple of companies or so. Do you think that might be a way to sort of curtail some of the power, maybe I don't know, increase sort of the pressure on politicians to do something? Talk through that for a moment.
Yeah, so there's a whole bunch of. So Benjamin Franklin said, America is a country of labor. And this has always been the heart of the American experiment, has always been, if you do not work, you shall not eat, right? The people who work for a living should control the politics, they should control their own communities and their own, they should have some control over the work that they do. That does not necessarily mean that industrial, union structures circa 1935 are always the best way to do that. We have a whole range of laws and rules that are designed to help people who work for a living, depending on the work they do. We have farm supports, or we've had farm supports we created those so that you could have family farms. And that's a way of supporting the family farmer who works for a living, right? You have the way we used to structure patents was a way to help the engineer who works for a living, right? He doesn't necessarily need unionization with other engineers, but he needs protections against the financier or the monopolist trying to steal the idea he worked to create. You have copyright, which did the same thing for the artist. You have a whole, and then you definitely have labor law, right? Labor law was designed to protect the worker in the factory, right? And so I think, you also have like co-ops and all sorts of other things that are designed to help the little guy come together and protect their own ability to have some power over society. And so, like that said, I mean, I think that unions have always been really important, and the decline of the ability of people to come together and express their voice in the workplace is, I think, is a really serious problem. One of the interesting things about there's been some recent organizing with Amazon warehouse in Staten Island, and then at Starbucks, and particularly with Staten Island, the guy who did it is a guy named Chris Smalls, and he really organized that warehouse. And the rest of the union world just wasn't there. They didn't help him, and they were pretty contemptuous of that attempt. And so you're seeing like the same crisis that I think you're seeing across American society within the institutions that are like not particularly functional is actually happening within labor as well. I mean, the Teamsters, the Jimmy Hoffa's son, James Hoffa, was running it, and he just lost a union election, and that's very unusual. So you're seeing like uprisings within the labor world. And I think that's healthy because, the same sclerotic, status quo oriented problems that are everywhere are also in the labor world. And it's really important that people are able to express their voice at the workplace. And they can't do that if they don't have good unions representing them. And so right now they usually don't have any union representing them. But when they do have a union, it's often not a union that they feel like empowered within it. They don't feel like the union is representing their voice. But hopefully that will, like, both things will start to change.
Matt, I want to go back to this point about prices being low, and that sort of resulted in concentration, economies of scale, and so on and so forth. Because it makes it sound like the only way you end up having faster decreases in prices of goods is with economies of scale, which means it's not so much about competition. Competition then becomes less and less as the economies of scale kick in, as these companies get more and more market share. And then once there are fewer other players around, well, now those companies can raise prices. So how do you kind of square that circle? The idea that you want to have lower prices, you want to have disinflationary pressures for items that we buy, right? Which does probably require some degree of concentration, but at some point, then you have a situation where there's no more competition. So what's the incentive to lower prices? It just seems like it's a strange feedback loop.
So let me think. So I think there's a little bit of one of the great intellectual tricks that Robert Bork played is they argue that the goal of antitrust should be for efficiency and low prices. Now, were they serious about that? Like, were they really, was that really what was the goal really to keep prices low, and did it keep prices low? And the answer is that no, it didn't. You can just look at the US healthcare system, and it's insanely expensive. And that is, and all of the, like, so many of the mergers and practices that hospitals and pharmaceutical benefit managers and pharmaceutical firms and so on and so forth pursue are done under the guise that they are efficiency enhancing. So the fact that they said we care about low prices and we say we care about concentrations of power doesn't mean that they actually achieve their goal of low prices. it was more a pretext for a style of thinking that they preferred, which is to have economists running and making policy based on fantastical assumptions. It wasn't, it didn't actually deliver what they said it would deliver. I mean, there is an economist that I like named John Polka who did a study where he looked at mergers that the Federal Trade Commission allowed, particularly in concentrated industries, to see, did the consumer welfare standard of antitrust deliver lower prices? And what he found is, no, in fact, it didn't. When they allowed these mergers through, prices went up. And, every time you go to an agency and you say, you should allow this merger through, we're not going to raise prices, we're going to lower prices. This is going to make stuff more efficient, economies of scale, and yada, yada, yada. And then they say, okay, we believe you, go ahead and do it. And what, of course, happens is then they raise prices. So prices are not low. And, they just created more monopolies. The fact that they say they like the language of price theory, it's not the same thing as them wanting to lower prices.
Right, and that goes back to that point that you get the economies of scale, you lower the prices, you take out the competition, and now you just get raised prices, and all the politicians just kind of fall for the nonsense legal arguments or whatever it would be that this is actually good for the industry and the consumer, and it never really is. So again, let's go back to sort of how does that get resolved with either existing laws or new laws, because that's something that again, I think you can argue is the case across pretty much every industry. But how do you try to get into an environment where there's focus on maybe not necessarily breaking up big firms, and in particular let's focus on big tech, but how do you get there to be some degree of action around that again would be somewhat timely?
Yeah, there's a broader issue, which is that nobody really thinks that anything can happen in Congress or really in DC in general. We're just kind of like, law doesn't really work anymore. So, and that's a crisis, I think, for liberal democracy in general. It's not, and I think it's worldwide. So when I say here's the thing that needs to happen in policy circles to fix this problem, or you could say that about any problem, and people will be like, yeah, but that isn't how things work. The way things work is that nothing ever gets done, or things only get done that help the powerful. So, like acknowledging that there's just this basic trust deficit that liberal democracy itself cannot function. I think that if you and I think that crisis is the antitrust is a good lens to look at that crisis. If you want to address, because we're seeing a lot of antitrust suits against dominant firms at this point, and we're seeing, I think judges are starting to question whether the consumer welfare model works, and Congress is having real debates about this. And there's sort of an open question about whether we should flex those democratic muscles again, which we haven't flexed in a really long time. And, that's the first step towards actually restoring a small R republic. It's just the people and their representatives have to decide that that's what they want. And I think they're starting to do that. They're saying, wait a second, if we don't make laws and enforce them, then Mark Zuckerberg is going to be making those effectively rules and enforcing them according to what he wants. And we're going to have to deal with, we're going to have to either accept that, or we're going to have to start to wield power ourselves. And that's the tension that I think both political parties are under right now. In terms of actually addressing the concentration crisis, if we choose to restore the rule of law, it's not that hard to fix. You just have to stop firms from merging as much as they're merging right now, and then stop them from pursuing practices that exclude competitors from markets. Because if you do that, then what will happen is, I think pretty quickly, you'll see a lot of new investment in firms to compete in these oligopolistic industries, because there's a lot of money to be made by doing that. And there are other changes you can make to accelerate that, but I don't. I think the problem here is that dominant firms can exclude competitors and they don't face any consequences, and then they can also buy their competition and they don't face any real restrictions on that. And that's starting to change. The DOJ and FTC are starting to put together a new way to handle mergers, and Congress is debating it. But it's a relatively slow process, and it is in the shadow of this bigger problem where just the rule of law doesn't seem to exist.
I will say, when you mentioned Zuckerberg, that it seems like we're moving from the Bill of Rights to the terms of service more and more, which we'll talk about in a moment as sort of a thought experiment.
I like that. That's actually that's a great line. I might steal that.
Yeah, it's interesting because even with all this metaverse talk, I mean, it is remarkable to me how we are giving up basic rights to privacy to anything you can imagine to literally just a contract that nobody ever reads the moment you click on I agree, signing up to whatever website or app they're signing up to, which, I think it's an important discussion. But let's bring in some of the audience.
Can I ask one question? Did you come up with that line
as
from the
far
Bill
as
of
I
Rights?
know? As far as I tweeted that a couple of months ago. As far as I know,
Okay.
Yeah. But I really do believe that because it's remarkably how people are just so willing to give up basically things that protect them so quickly without even a single thought. I mean, it's sort of system one versus system two a little bit as far as reacting versus thinking. But anyway, let's go to the audience. Well, so let me turn that into a question for you, Matt, around the conflicts of interest. I think that is an important point, right? Ultimately, everything's about incentives. So how do you incentivize lawmakers to actually do the right thing for their constituents and also to spend the time in terms of the laws that are being written? I mean, I've joked about this many times. You see these pictures coming out of Congress of these, 2,000-page stimulus bills or whatever it would be. And I could promise you nobody read beyond the first 2 pages, right? And then they say, oh, well, we read it out loud as if it's an audiobook. I'd love to get that audible version and listen to it myself, right? So how do you view that aspect of democracy when you clearly have as many conflicts of interest as there are now?
Well, the problem with Congress is not that it's not that it's corrupt. It's that they don't have enough power. Congress is a really interesting, but I'm a very pro-Congress person. And I think Congress is it's one of the only places where there's actually some skepticism of corporate power. Like the Fed is the worst. Like the Treasury is the worst. You mentioned the Council on Foreign Relations. That's not formally a part of government, but it's like obvious. It really is sort of a deep state type of networking. So there's a lot of that all over the place, and they are buried in these executive branch agencies, and they do their work out of sight, and they're not corrupt necessarily in the way that you might think they're corrupt. Like they are really believe themselves to be hardworking, tough and thoughtful, and they really believe this. They're not like Machiavellian. They're just bureaucrats and they're out of touch. And there's a lot of them. And Congress, there's a lot of problems in Congress, but it is fundamentally more in touch with the voters because the voters pick those people. And when Congress has real responsibilities, right? Like when the bailouts happened in March of 2020, Congress took that very seriously and really crafted some smart. I mean, I really didn't like that they gave unlimited authority to the Fed. I thought that was really destructive. But the Paycheck Protection Program, I think, was done really well. And there were just a bunch of things that were done really well. And that's because Congress had a lot of responsibility and power. And when you infantilize Congress, then they do a terrible job. So I think that Congress should be running monetary policy. I think that Congress should have a lot more power than it does. And I think if Congress did have more power than it does now and actually just chose to wield more power, that it would be far more effective than it is now. And but another way to put it is that the real issue here is that the voters have to make a choice about what they want. And we're at this moment where people are very unhappy with the status quo, but they're afraid of making any change because they think that things could get worse. So it's like, I want a revolution as long as everything stays the same. And that's what you see. I think this is something that voters feel. They're very scared. And I think this is something that policymakers feel. And we're in this moment of transition, which, it's a long way down if you make a mistake, right? And so ultimately, like, this is something that we have to resolve through our democratic processes. Like, people have to debate what they want. And we're seeing that debate happen. And it's ugly and it's messy and it's funny and it's interesting. And but it's happening right now, even though it feels really ugly. There are, policy is starting to change. I mean, just like one thing that no one noticed is that Congress just imposed wholesale regulation on the ocean shipping industry. It's called the Ocean Shipping Reform Act. And they undid the deregulation of the 1990s and 1980s. Not entirely, but they did it, but they undid a bunch of it. And that is just, it's just like, okay, that's a thing that Congress did and was very, and the Federal Maritime Commission is now issuing fines to these ocean shippers for doing things to importers and exporters. It's like, you don't necessarily see that or notice that because the media doesn't cover it. But when Congress can do a lot of good things, and I think, we just, we have to hope that, we elect better people and that Congress starts to wield real power.
By the way, I put in the space the first time I think I tweeted that, which was December 21st. We've gone from a Bill of Rights to terms of service. So Oh, hopefully I didn't subconsciously take that from somebody else, but it was in response to the metaverse.
Yeah, I mean, Peter Thiel's an interesting guy. There's, you know, he's a real intellectual, right? And he plays with a bunch of different ideas, some of which are really dangerous, and some of which are really, compelling. And I think, like, he is actually, he wrote that book, Competition is for Losers, but he's a very strong advocate of antitrust against Google, and explain that, right? I think he plays around with ideas, and I think his basic view is that the kind of professional managerial class that runs policy in the U.S., which he would extend to universities and to sort of a lot of institutions that are like Council of Foreign Relations, these like kind of institutions that are not in the state but are sort of around the state, parastate institutions, that those are corrupt, and that there needs to be some sort of way of deconstructing that and rebuilding some other way of creating freedom in the US. And I think that he would probably, his view of freedom would be, I'm not sure that it's the same view that I would have, but he plays around with a lot of different ideas to take on that problem. And some of those ideas I think are really interesting, and some of them are dangerous. And just because there's like this culture war thing, someone like him it's really easy to demonize someone like him and to like look at and just ignore like all the interesting stuff and just focus on like the bad stuff. But I actually think he's a much more interesting and complex character than kind of most people give him credit for. And it's not to say that like his ideas are always good or that his ideas are not dangerous. It's just to say that like he's really interesting, and I don't have like I don't exactly know what he thinks, but I think he's one of the more interesting characters that I've seen in politics. I mean, I think his views on crypto, like I get why he's a crypto maximalist, and in a lot of ways, I think that's very dangerous. I know why he believes what he believes in that realm. I think it's very dangerous. I think he wants to see antitrust action against Google, and on that, I think I would agree with him. And then, I think there's different things that he said about representation and democracy, and some of those things can be. Like, I think if you can read them in ways that are very scary, and you can read them in ways that are more charitable. And I think he kind of plays around with ideas. So it's sometimes hard to know. Yeah. And I'm generally more sympathetic to people who play around with ideas. That's just kind of who I am. But, I get why he's a very controversial figure. So the answer is sort of yes and no, right? Like Woodrow Wilson, who was, very bad in many ways, but he was a great anti-monopolist. He was really skeptical of expert commissions, right? And there are different views on the administrative state, right? And some people thought, well, we need experts to tell the little people what to do. And some people thought we need administrative expertise within the federal government to make the corporate sector transparent to the public, right? And those are different visions. And like the Securities and Exchange Commission, for example, it's an expert body, but what they really do is they create transparency in markets, right? And it's like they don't tell people, I'm better than you at investing, here's where to invest. They just say corporations, you have to and invest, and people issuing various forms of securities have to disclose a bunch of stuff to the market. And so I worry tremendously about the consolidation of economic and political power. And there's no question that the FDA is a complete disaster and loves consolidated power in the medical space and actively encourage it in many ways. Germany, for example, they approved, 50 different rapid COVID tests. At the FDA, the guy, like they approved like 2, which is why tests are $20 a piece here and they're $1 in Germany, or one of the reasons. And the guy who approves the test at the FDA worked at both companies that they approved, right? And they've approved more since then, but like basically those are the only 2 that were able to get to scale because of the really slow and bad approval rating. And that's just horrible. And it's not that the FDA is a monopoly per se, like it's not a monopolistic corporation, but it is, they've adopted that view that we are experts who know better than everybody else. And, and they have it's philosophically, the people that work there are, they see themselves as it was very similar at the Fed, like people at the Federal Reserve and at the FTC and at a whole bunch of different administrative bodies in DC. They are just like, they all see themselves as kind of expert priests who know how the world works better than the little people. And I think that's like a result of the last 40 years of efficiency enhancing, philosophy, right? That if your view, like that's what Bork really did. Bork's view was the little people shouldn't rule, like the populistic way of doing antitrust and all other policy, which is what he used populistic in a derogatory term, that was bad because the little people don't know what's good for them. And when you say, well, we need to have experts and elites run things, there are left-wing and right-wing ways of doing that, but they're fundamentally about having, people in expert bodies and boardrooms, telling you what to do. And I think that's a really bad way to organize a society. You need experts, but what you don't need is rule by experts. That's really dangerous. Yeah. So Canada, I get a lot of email from Canadians who are like, how come you never look at our monopolies? Somebody once told me that Canada is the land of moose, maple syrup, and monopolies, which I thought was like kind of funny. It told me all about, the different problems there. California has term limits. And what happened when they imposed term limits in California is that lobbyists gained a lot of power because the new representatives would show up. They didn't know anything. They had to rely on the lobbyists. And then by the time they learned anything, they were term limited out. And, the one way I think we have term limits, they're called elections, right? And if voters are going to elect, decrepit people who don't want to do anything, then it doesn't matter if those people have been in office for a long time or if they're new. Like there's plenty of new members of Congress who are terrible. And there are a lot of old members of Congress who are very good. So, that's not to say, like, I do really think we need a generational turnover in governing institutions. But like, what's really going on here, it's like the voters really do want their politicians in office. Like I've worked Democratic primaries, I've seen Republican primaries and general elections. Like the voters need to change their minds and they haven't. And so I think like imposing term limits is sort of another way of saying, well, we want checks on the voters. And that's not going to work out. And I would also say that one of the ways that you move very unpopular policies is you wait until the elections have happened, and then you have a whole bunch of people that are in a lame duck session who are going to leave office but still have voting power. And they'll just pass the most unpopular bad stuff because they're like, well, screw it, I don't have to face the voters. So I think that elections, when people have to focus on elections, they often have to do better policy because the voters want them to do better policy and the special interests don't. But like you can't hide from the voters when there's an election. So I think that the electoral pressure is good for policy and that letting politicians make decisions without pressure from voters lets them do things that are bad, that are not, seen as legitimate by the voters. Well, the traditional argument on behalf of private equity would be the principal agent problem, right? So there are a lot of firms that are poorly managed. And what do you do when the management is bad? You have to, because the management is operating on behalf of other people's money, right? Like a CEO doesn't own the company. And so they have the incentive to feather their own nest at the expense of shareholders. And so what you should do is you should align the incentives so that, the owner and the operator are the same. And then that's what like Michael Milken and, the original leverage buyout guys in the 80s were saying. They were like, look, this makes us kind of owner operators. And so we really have skin in the game. So I think that would be the argument from the PE side. I mean, it's nonsense, like it's obvious nonsense, but that's what they would say.
Yeah, no, I think that's a fair point. And it's just their justification for existence is probably that it just allows them to have more leverage so that certain players can benefit from that leverage in a concentrated way, which goes back to the whole point of the space, which is that we have a crisis with concentration in industries and power. And with that said, we're going to wrap up here. Matt, this was a real pleasure. I appreciate you spending the hour, a little over hour here with everybody.